Hello, welcome to today's video. Today I'm here with Will Tyndall from APIP Global, the developers behind our latest Mongolian project, the NUT. So we'll be going on that in a little while, but before we go into that, just wanted to go about our previous experience in Mongolia. Back in 2007, we launched our project, our residential scheme, or a couple of residential schemes with the same developer. So maybe just as a quick introduction, if you could tell us how those went.
Yeah, so originally your clients came into the Regency residence. That was a development we completed in 2010, and I believe clients started coming in around 2009. It's done incredibly well. It's one of the most popular buildings in the whole country. Typically, those early subscribers returned around 300% capital growth and benefited from yields of around the mid 20% per year.
Indeed. It's certainly one of our best projects that we've done.
Great.
Yeah, certainly in the emerging markets. So great that you've kind of delivered so far. So you've got pretty ambitious plans by the sound of it in terms of other projects that you've moved on to. So since then, you've moved into commercial. And that brings us on quite nicely to NUT, which is your latest commercial offering. Do you want to give us a bit of an introduction into NUT and the concept and why it came about and the location as well?
Yeah. So NUT is a 10,000 square metre plaza. It's really the first sort of planned retail offering in the whole country. So it's going to have predominantly retail on the ground floor, then some office space mixed with retail on the second floor, and then some residential apartments on the top floor. It's a project that we're launching at a time when Mongolia continues to grow very, very quickly, but really the sort of real disposable income has gone up so dramatically over the last 2 years, so around 15 to 20% per year. And Mongolians are avid consumers. A lot of them go abroad to shop, so they'll fly to Hong Kong or they'll fly even to Italy to go and buy their designer goods, purely because there's no existing offering in the country. Okay, and what's driven that consumer spending? Well, why is that what's driven that growth? So it's all off the back of minerals. So Mongolia's economy is very mineral commodity dependent. They're sitting on an incredible amount of minerals. So it's estimated between 1.5 to $2 trillion worth of minerals in a relatively small population. So the population is set to become incredibly wealthy, and is becoming incredibly wealthy already. Okay, so would you say it's very similar to China and what's happened in China? That there's the huge growth in disposable income. So, for example, I think Rolls-Royce exports more cars there than they do here in the UK. Is it a similar kind of story, or is it slightly different? How's it work? Yeah, I mean, it's I suppose Mongolia is probably where China was 15, 20 years ago. So we see a few Rolls Royces around the streets, but not on a mass scale yet. I think it would be better to describe it in a sort of Middle Eastern way. So similar to Qatar. So a very small population in Qatar, but incredibly wealthy population. Driven by local resources. Driven by resources, and it's very, very similar to how Mongolia is sort of looks like it will be in the next sort of 5-10 years. And that's clearly what's driven the demand and the growth in the market on the residential very much so.
Side.
Yeah.
So commercial, we've touched on why, because consumer spending is increasing.
Exactly.
But why now, and why the area of NUT overall?
So why now? It's because as one of the largest sort of integrated property companies out there, we are naturally the sort of default point for the large international retail groups who are looking to come into the country. So we've been approached over the last 12 to 18 months by a number of these large retail groups looking for our assistance to find them the right location, find them the right actual property, and typically they've come back to us and said, there isn't with the existing property available property, commercial property, it's just not suitable for these luxury brands which have very strict parameters in terms of the way they want their shop to look. Sure. Okay. So off the back of that, we decided that the time was right to focus on that and actually to build something really tailored to their requirements. and it's been very well received as a result.
So can you describe what the scheme itself? Obviously, we've got a number of brochures, but in terms of the scheme, it'd be good to give us a bit of a feel.
It's got a little bit of character to it, so it's got a bit of a sort of European style, and yeah, I mean it's one of those places that people will go to spend a day or to spend half a day. So they'll shop, they'll go to one of the restaurants, they'll go to the coffee shop, sit out in the square. There's a central square. It's going to be very well landscaped. There's a sort of mini platform stroke stage for sort of events, for weddings potentially as well. We've got a tower with sort of stained glass windows in it. Because nothing like that exists.
But yeah, so what's the kind of style overall? Is it built for kind of more of the Western style?
Yeah, exactly. So, I mean, in terms of who we see renting it, and we've started to have pretty advanced discussions with a couple of these really well-known sort of retail groups who bring in multiple brands into a country.
Local or international?
No, international groups. So they'll bring in the Western brands that you see on the UK high streets, yeah, that's who we see sort of going in there, and the location of it's quite an interesting one. So the city of Ulaanbaatar was actually built for about 250,000 people, and there are already around 1.4, 1.5 million living there. So there's various sort of physical constraints around the edge of the city. So there's actually just mountains that stop it from expanding in certain directions. And there's only really one way that it can expand, and this is out towards the airport. And there's one plot of land that's been rezoned and designated as the sort of growth area in Ulaanbaatar. And that's where we've chosen to locate it. So it works from two aspects. Firstly, it's sort of, not an outer town because it's only five kilometres away from the very centre of the city, but it's a destination that you drive to and you spend some time at. But also there's a new community right next to it that has been building up, and it's really like the very, very wealthy guys that live there.
Upmarket.
Very, very upmarket. They're probably the most upmarket place in the whole country, actually. And it's this beautiful little valley, and it's.
And how far from downtown Ulaanbaatar is it?
About sort of 5.5, 6 kilometres.
Oh,
so very close. And this community that also lives there hasn't got any retail whatsoever at the moment. It's got 2 hotels there, but no retail. So it's partially catering for those guys, but it's also we see all the inhabitants of the capital coming and using it.
So in terms of the actual deal itself, now the project's already fairly well capitalised because it's under construction and almost complete. I've seen some pictures recently of the opening ceremony you had for the retailers. Talk to us about the actual investment offering that we've got. So
we're offering individuals actual units. So you own a whole unit yourself. Freehold. And you get issued what's called an immovable property certificate, which is basically your deed, which you can take a charge against. It's bankable. And yeah, we're going to offer a 12% net guaranteed rental yield for 2 years.
Sorry, just on that, just in terms of the immovable property, that's certainly one of the things that we experience on the residential side. Compared to a lot of Asian cities, from an investment point of view, it's very easy for foreigners to invest.
Exactly.
Can you just briefly explain the structure? It's simple reservation form. Goes into, and that's registered with the local land registry.
So there's a reservation form that needs to be completed, and then there's a sales and purchase agreement, and that's just a contract to say that you have elected to buy this particular unit, and this is pre the completion of the development. On completion of the development, which should be around December 2013, the sort of officials come out and grant the permissions, and then we register on your behalf for the immovable property certificate, and then you will receive that. And once you've got that, you have full title over the property. It's very refreshing in comparison to, as you say, other Asian countries. You can take it if you want to sell it. You literally just transfer it across.
And the key thing is costs. So because of the fact that it's not as complicated as some other Asian cities to register the title. That's all covered in the purchase price?
So we cover all the costs, so there's no external additional costs that you need to be aware of. yeah, it's all catered from the price.
Okay, brilliant. Okay, so in terms of the returns, so you started touching on, so it's 12.
Yeah.
12%.
Yeah, so we're going to offer 12% net guaranteed rental yield
for
2 years,
Okay.
just to really get the project started. I mean, we obviously believe in the project, but we understand that international guys coming in and buying who might not have necessarily been out there, they want some form of assurance, and that's really what we want to provide with that. But we expect the capital growth to be really quite impressive over at least the first 3 years, and it might just slow down a little bit after that as other retailers, developers of retail projects catch up. But we expect around 20% a year for the first 3 years each year, and that's sort of driven twofold by firstly the area that it's located, so this new up and coming area, but also the fact that whereas residential has done incredibly well each year, retail is only just starting out. So it's only just now that these sort of consumers are buying, and there's the demand from the international brands to come in.
And that's the reason that we started talking.
Exactly.
Initially, that inherently commercial does tend to follow residential in terms of the market.
It's a pretty good case study, really. Is that typical sort of 4 or 5 year lag?
Okay. So prices are roughly, is it right in saying, about $2,600
per square meter? Yeah. So actually, all the units at the moment are priced exactly the same. So it's all $2,600 a square meter.
Okay.
So there's obviously a bit of incentive to get people in quickly.
And how does that compare with downtown Ulaanbaatar in terms of prices? What do you typically?
So we have got another development. We've got a development more centralised, and that's priced at between $6,500 to $7,000 a square metre. So it's a very different price point, but it reflects that it's not a central CBD development. But as a result, we expect the returns to be very healthy.
So at $2,600 a square metre, that's what type of size are we looking at on average?
So the units range from around 60 square metres going up to, I think the largest is about 350, 400 square metres.
Right, okay.
And there's sort of, there's lots of opportunities between that.
Right, okay. So on average, from memory, looking at the price list that we looked at earlier on, roughly around $300, $350.
$300,000 US, about that to come in. I mean, a lot of the small units went very, very quickly. But probably 250 plus is really the entry point at the moment. Okay, fine. Okay,
so you mentioned that for the first couple of years you're offering a rental guarantee.
Yeah, if people want that, it's not necessarily you don't have to take that up.
Okay. And what are the predicted then? So that's what you're offering as a guarantee. What are the predicted?
I think the figures that we've been working on is a base minimum rental of around $32, $33 a square metre per month. So if based on $2,600 per square metre to buy, that works out at a yield of sort of mid-teens, something like that, maybe a little bit more. So those are initial
based on the calculations of 35 that we looked at a short while ago. That's roughly about 14.8.
Yeah, exactly.
And how realistic? This is one of the questions that a lot of our customers are going to ask.
Sure.
Well, how realistic is that? Because it's long term. We've built a reputation of offering investments that work over a long time period. So, what reassurance can you give us in the fact that that investors are really likely to get a sustained income of the mid-teens? That seems like a very good yield.
Yeah, of course.
Compared to a lot of properties that we're selling at the moment. It's obviously substantiated by the rentals, but what can you kind of give us that gives a bit more comfort that there's going to be long-term rentals within the
Yeah, I mean, so in terms of the discussions that we're having with the tenants at the moment, typically the length, it's dissimilar to residential where contracts tend to be 1 year or 2 years at the max. The leases tend to be minimum 5 years, majority around 10 years. We've even been speaking to some retail groups who want 20 years.
Right.
And there's if that lease is in place, then there's a lot of assurance in terms of what the yields are going to be. There's full visibility on it. And obviously those are stepped up with the years, so they tend to be in line with inflation, which is very important out there because any fast-growing country has to sort of ensure that they are protected from inflation. And yeah, I mean,
so it's more the length of the contract.
It's the length of the contract, exactly. And And in terms of the people coming in and taking these units, they tend to be very large groups. I mean, they've got many billions of dollars on their balance sheet. So there's strong covenants in place. Yeah.
Okay.
Yeah.
Okay. And in terms of exit, another question that we get asked a lot, in terms of how people get out of their investment after a number of years.
Yeah.
Obviously, Asia Pacific Investment Partners have one of the largest real estate agencies on the ground. So is this something that you'll be I know that certainly some of our existing clients you've helped exit. I've heard stories that they're very excited when they actually come to exit that. But how does that work in terms of the exit?
Yeah, so I mean, we do actually have the largest real estate agency in the country. So yeah, we're very well positioned to look after our clients. But yeah, I mean, I think with taking the residential as an example, typically the secondary market has been full of the Mongolians actually buying out the international investors. And normally Mongolians are a little bit reluctant to buy off plan. It's sort of just a psyche that they have. When we see Mongolians coming in and buying out, but we also see like some of the sort of institutional investors who like to buy commercial property, and they might come in and buy look to buy a massive chunk all at once, especially if the yields are mid-teens, that's attractive enough to get these guys in. Sure. And there's even some small groups already based out there who certainly on the residential side, any residential yields which are above into double digit, they will snap up immediately. And we expect exactly the same with the retail. It'll probably take 6 months or something. They like to see a completed building, but then they tend to come in. Okay,
right. Okay, so in summary then, retail offering roughly $2,600 a square metre, which equates to between $250,000 up to over $1 million for the larger units. Concept retail offering in the Nooks Valley out-of-town shopping centre, one of the first of its kind. Anything else to add to that?
I mean, just that we've got an office in London, so that clients, obviously you have your clients, but in terms of flow of information, I'm very happy to meet particularly any UK clients, for coffees or just pick up the phone. I'm very happy to be sort of a point of contact for anybody, and great to have sort of some new investors on board.
Brilliant. Okay. Well, for more information, we have a full investment guide that we've put together with a lot of supporting information such as floor plans, price lists, and market reports, which we've compiled together over the last few months or so. So for more information, please visit our website, www.propertyfrontiers.com, or give us a call on 01865 202 700. Thanks.
Thanks a lot.